At an interesting time like this, when you have a lot of fundamental favors working in favor of the equity markets, let's understand what exactly is on top of mind when it comes to funds, which are, some of the individual stocks and sectors that are on their radar. Who better than Kaustubh Belapurkar, Director Fund Research at Morningstar Investment, who joins in to give us some perspective. Let's start off then, Kaustubh, with first up, what exactly your sense is in terms of the large caps. Where exactly are we seeing the funds go towards? Because now we're seeing contribution coming in from across the spectrum, but there was a time that it was those select stocks only contributing.
That's right. So, that's right. I mean, very interestingly, so what's happening is financials is again kind of, coming back into flavor. Leading, but the names are changing, right? So last year we spoke about the likes of HDFC, the twins really driving the flows, but clearly now what's happening is the likes of Axis and ICICI have taken the front role in terms of really getting the meaty flows in. This month we also saw Kotak getting a fair bit of flows, but that's largely driven by ING selling their stake. So it is largely kind of concentrated towards the financials. The other segment that's getting a little bit of flows is technology, but it's again limited to the two names, that's TCS and Infy. In fact, we've been seeing selling on some of the other, the likes of TechM, HCL Tech, Wipro, and consistently through the last 1 year or so.
Right. So, just on the point of banks, a couple of experts that we've been speaking with say that from here onwards, while banks will continue to take leadership, there may be a churn within banks. So maybe Axis and ICICI Bank may pause and you could see fresher gush of flows or a chase towards, say, a Yes Bank, where now the fundamentals seem to be in place. Do you sense something like that coming? And have there been any flows which have trickled into Yes Bank in the month of March?
So, in fact, data suggests otherwise, at least so far from what we see. Axis is continually adding positions, and there's been a lot of money that's come into Axis. Same with ICICI. Yes Bank, I think, while things are now kind of looking stable, we haven't seen a lot of money chasing that stock. Probably a few months down the line. It's too early to say right now, but when we speak to managers, they're yet to start kind of building more conviction on a counter like Yes Bank. So I think it's still limited to those two, but yeah, I mean, things can change over the next quarter or two.
What about Reliance Industries, given the fact that it's really been putting on quite a bit of muscle off late? What's the sense that you're getting with flows here?
Yeah, so Reliance is a story that surprised us, honestly. Managers were a little late in the game to start building positions, but they've now been creatively kind of adding a fair bit of positions. So last month was no different. They added a fair bit of Reliance in that portfolio, and now they're kind of looking, okay, Jio's played out now. What's the next big play? Retail, enabling that is one of the plays they're looking at. So no one questions the execution capabilities that they bring to the table. So I think they're reasonably confident that they could take that to the next level.
What about the broader markets? Where are you seeing money flowing in, and where are the pockets where you still feel that, funds are still averse to touching in?
Yeah. So interesting trends. So, for instance, the discretionary space, you're clearly seeing autos, there's a sell-off. So, I mean, while it is a fairly large holding, it was popular till maybe about 6 months back. Clearly now you can see the likes of Maruti's, Eicher's, they are continuously witnessing some selling on those counters. So that's clearly happening. Pharma's again kind of been almost a non-existent sector from manager space, where we haven't been seeing too much addition. We're starting to see, like I said, addition on banks obviously, and select, I would say some of the, HDFC continues, but even the likes of LIC Housing Finance, Repco, marginal additions there on the HFC.
So NBFCs too are beginning to see some money flowing.
Okay. We were talking to some experts earlier, and they're talking about right now the word on the street is also where should I be exiting or where should I be selling from. You touched upon some of the sectors and the stocks where we're seeing outflows from. But is there some sort of a decisive trend that you're seeing by way of a sector that we're seeing outflows from, or that's being looked at with a lot of caution?
So I think materials is one. Clearly, we've seen some slowdown even, in terms of, the revenue expectations from the likes of metals and cements. So that's clearly one space that has slowed down significantly.
But has that, when it comes to metals, has that always been a trend, or is it something new?
No, I would say over the last 3-4 months we've seen an increasing trend. So, managers weren't really aggressively buying before that, but now you can start seeing them pairing some positions. Ditto goes for cement. So that's some of the trends, micro trends that are what we're seeing on the material space. Pharma, like I said, it's been status quo. We don't really see any changes. The other interesting bit is that still a lot of flows are being driven into large caps. Mid caps is still not that aggressively being bought into, but I think that's also largely a function of that investor money is still coming into funds that predominantly invest into large caps rather than some of the mid cap funds, and that's why managers are clearly more focused towards the large cap counters right now.
Yeah. But overall, what is the picture telling you? Because the AMFI data seems to be suggesting that its DIIs are actually taking a step back,
right.
And you're seeing redemptions come in for even safer categories or traditionally safe categories like balanced funds. It's the ETF money and the Gora money which is pouring into the markets. Is that the sense you also get?
Yes, absolutely. So I mean, DIIs, the retail investors, I think are still present, I would say, because the SIP flows are pretty steady. But I think what's happened is, the HNI money is taken a pause and actually pulling out. They're probably waiting for the right time, looking at what the expectations around, the results, the election results, and then take a call. So I think that pause has been there for the last 3 to 4 months, and it has slowed down quite significantly, no doubt about that. But I think the retail book is still pretty steady, which is great. But yeah, FII money has been pretty strong. Obviously, you had Feb and March printing, in close excess of 4 billion. So hopefully that trend should continue.
Based on historical data, because we're constantly drawing comparisons to what happened in 2014 by way of market move, flows, etc. What has generally been the trend when it comes to flows? Is it that sort of pre-election fund flow thrust, and then it ebbs off a bit? What is the trend? So
typically, when I just break it down into trends for even retail or HNI individuals, right? It's really the large ticket individuals, the HNI guys, who kind of take those large bets, and that's why I think that's the money that's waiting on the sidelines that can potentially come to the markets. That's what we saw in 2014. They came in a large way into, say, small and mid caps at that point of time. And obviously we saw the kind of rally that happened around that. Retail individuals were obviously a little later in the day once the markets had already run up a fair bit. But right now, like I said, the retail guys are all there in the market. It's the HNIs who need to start putting in that money.
Yeah. The other phenomena that we've seen again, and it's a March phenomena, is the kind of currency strength that one is seeing. And I don't know what the correlation is. Is it equities tracking currencies or vice versa? But do you sense any money flowing out of IT? Because that would be the typical trade.
Right. It's possible. But if I just looked at the sectoral trends, even within the foreign institutional investments that are coming in, IT is still getting money. So there's still, again, it's select counters, like I was saying, the two large names, but then that sector is still drawing money. So unless you see a increasing strengthening, then perhaps yes. But I think right now the trend seems to be a pretty stable inflow into this too.
Okay. Kaustubh, we'll let you go then on that note. Thanks very much for giving us a flavor as to where we're really seeing the overall trends for fund flows coming in, which are the sectors that are in favor and aren't, and of course the overall general trend.